Hey guys, it's Steve with Futures and Charts. And speaking of charts, the it's been kind of a crazy last couple 3 days. Obviously, you guys know all about the Iran war and how that's affecting the oil market and how it's also affecting the fertilizer market. So I mean, these fertilizer companies, they don't even want to sell it because, and I get it because I'm in the fuel business, and so you hurry up and sell your current inventory and then you have to replace it with really expensive fuel that you don't know if the market's going to drop back in a certain amount of time, and you get stuck. And I think that's what the fertilizer companies are looking at as well. They're just they don't want to have to buy that expensive fertilizer, so they don't really even want to sell any. So they just kind of want to wait this out, and I think that's probably good for all of us to just wait this out. And if you don't absolutely have to have it, maybe get little bits at a time. But I would say that buying, tanker loads of fuel at right now is probably not in your best interest. So, who knows? Oil could go to $100 or something like that. But the way the war is going, and the way we are dominating and basically destroying all their military infrastructure, I would say that this is going to get settled fairly quickly, and things will probably settle back down. So um, I think let's just go look at the charts and see what they're looking like today. So there you go.
Okay, so right now we're looking at the April crude oil contract, and we are down just a little bit right now. It's actually trading up 3 cents, but from where it opened up this morning, it's down a little bit. So, and it's, not much difference actually. So right now it's actually 74.56 or 53. So it's bouncing around the unchanged mark there. So, and as you can see, we had a big run up, and we had a big run up in the overnight trading too, it looks like, but it has settled back down. And like in a lot of videos I've said, when you have a gap up like this, eventually this is going to want to fill that gap back down to the downside. So at some point we could be back down to the $67 range. Just depends how long it takes us to get there, but that's probably what is going to happen. So and it looks like this is the New York Harbor April diesel contract, and it is looking like it's the same as the crude. It's kind of flat for today, and not really doing much at all. So, but we've had probably a bigger run up in the diesel than we did in the crude, percentage wise. But I would expect this to do the same thing. If we're gonna revert back to the bottom of the gap here, we're still looking like at around 260, which is still higher than these other highs back here. If you do a line here, this would be the breakout point here of the neckline, and then you'd have a continuation, and then of course we had a parabolic move. So, but I would look for that to come back to the 260 range at some point here if we get some resolution out of the Middle East. So, and let's take a look at the Minneapolis spring wheat contracts. Whoops, I don't know how that happened, but anyway, that's the New York Harbor. So I lost my wheat contract. Anyway, but that's pretty much the story of the fuel today. It's just flat today, waiting to see what's going to happen, I suppose, over there. And I do expect things to go our way. There's just not much left. I don't know how they can continue the way they are. Other than they're stubborn, it's kind of like some of their ilk being a suicide bomber. They don't really care about themselves. They just they might just want to go out in what they would think of as a blaze of glory, but as long as they go out, I don't care. So anyway, that's what I got for you in this one, guys. We'll catch you in the next one. Thanks for watching Futures and Charts.